This one stock can change early buyers' lives. I'm not a financial advisor, but some financial advisors might say to buy as much as possible before December 3rd. This company is SIM, ticker symbol SYM. It's got a big deal with Walmart. They do warehouse automation. Walmart of today is not the Walmart of even a decade ago. They basically have the type of technology that even the Meta hyperscalers is working on. So this company, this warehouse automation robotics company, is probably going to be on the cutting edge of humanoids as well, like Tesla is working on. And this company, SIM, recently had earnings. Earnings were solid in the hundreds of millions, high hundreds of millions. And over the course of the year, they have revenue over $2.5 billion, almost. And it's up 20% year over year. So this is a good step in the right direction. Tesla's humanoids are not here yet, but this is a first example, along with like Intuitive Surgical, which has some remote operated surgical robotic platforms that are being used widely, like in actual surgeries. This is one of the first examples of basically human form factor, to some extent robots, that are being used on a mass scale. So it's good as investors. It's a little scary as a person, but that's the company. It's setting up well. There's another company, Real, ticker symbol REAL, the Real. They do luxury resale, which is, as you can imagine, incredibly popular with anyone who shops. Pretty much talking about women here. They have a partnership with Gucci and Burberry. I mean, they resell their products. They also have a sort of initiative with Balenciaga to recycle, upcycle their products, whatever that means. This company is unprofitable. They have 20 million members though, and it could be the next Poshmark, the next high-end eBay. So we'll take a look at that as well. They also have revenue that's up 20% year over year, which is big for an unprofitable company. They're growing. That's sort of the whole point, to scale. So let's jump into these. This is not financial advice as always, but hope these are helpful. I think they're pretty good ideas right now.
This is Sam Putnam.
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 All right, so this is Symbiotics, SIM. I mean, this says financial services shell company, but that might be the actual structure. This tool is pretty good, but this is what they're up to. Retail, wholesale, food and beverage. I mean, think grocery stores like Costco type places. They do automation, robotics. Obviously, software platforms are part of that. This is old news to come out of a de-SPAC. You don't really have to worry too much about that. You can see that Walmart has a big stake in them. So this is pretty interesting. I don't know how true this is, but it says 99% of Walmart's investments are in this one company. I mean, that's as of few months ago, which is a pretty huge vote of confidence. I mean, if we, let's see, I don't even know how I just did that. I think I clicked on here. Yeah. So SoftBank, yeah, this is not even totally working. Obviously what I wanted to do was click and see, yeah. Oh, I see. It scrolls. I'm sorry, guys. I'm like learning this tool right in front of you while recording a video. But this is a really cool feature, actually. It might be pretty useless actually in terms of actually investing, but it's definitely intriguing. So you can probably, yeah, you can sort by percentage holdings. So SoftBank is like the Goliath of venture capital companies. They are the leaders of that $500 billion Stargate initiative, which is basically propping up the entire US economy right now, given that AI is making up so much GDP that without it, we'd have like 0.2% growth this year. So anyway, we can see what they're up to. They own T-Mobile. I wouldn't invest in any of these companies just because SoftBank owns them. I'm just saying that look at the whatever it's called, the company that Sim keeps. I mean, they're almost as big a holding as Intel, about half as much as Nvidia, and up there with T-Mobile-ish. Look at Taiwan Semiconductor is a tiny stake as opposed to Sim for SoftBank. Tempest is up there as well. New Lemonade. All these companies, I'm not saying SoftBank has the Midas touch or whatever. I think the guy's name is Masa. He's definitely had some whiffs, but he definitely goes big. And a lot of these companies are definitely interesting right now. GSAT and Better recently, Better in the real estate technology, GSAT and satellites. But I'm not trying to totally distract you or anything from this company, but this is great that Walmart owns 13% of this company. And their biggest customer is Walmart. I mean, I guess you could say if something happens to Walmart, they're in trouble, but Walmart's doing pretty well right now. Even as the market is chopped, Walmart is going up after earnings. So that should be good for Symbiotic had a pretty massive earnings reaction that you can see on an intraday chart. I've got the volume superimposed in here as well, sort of by mistake, but it's great because you can see it. Ton of volume here on that first day after that after hours earnings. This is about as good as a earnings reaction as you can expect. So 77.7 is that spot you want to watch. You don't have to be quite that exact. Maybe just call it 78. Should hit here, sort of hit here. Obviously it went over up there, but if you want to just risk here, you can. I'm just saying if the market does drift down, which it probably will, because we just had 4 days in a row in all of the indexes up. I mean, futures and then Monday was basically nothing. We're probably going to drift down. Small caps maybe are going to drift down even more because they had a even crazier run. But Sim is not a small cap. Their market cap is 30 billion. And that earnings reaction is awesome. So that's Sim. And then the other company looks pretty great too right now. This is definitely a level 1280. But now we're up here. And talking about 1280 because this could definitely drift down. I mean, I know if you've been following along, I did mention Caterpillar, which looked pretty awesome. But it did chop down. So, these companies are susceptible to the market. So even if they look like they're having a change of character to the upside, they can take a while and they can really get dragged down. If we look at this was October 30th. And if we look at October 30th, that's like the top. So we almost got back there, but it's definitely been a mess for almost 2 months. So it's not easy to pick the stocks, but Lumentum definitely just disregarded the market. Earnings helped. It makes sense that earnings per share beat. It's actually interesting if we look into Lumentum's earnings and sales and guidance. I'm sure we're going to see that everything was great, but it's also notable that you can have crazy moves even when everything is not great. So that's why I sort of gloss over earnings and sales. I mean, it's good to talk about them, but in general, there aren't like totally predictive of the sale price. So they did have raised guidance, and the strength is in a vertical that everyone knows is super massive, which is AI infrastructure. So they had the recipe: higher guidance, higher earnings, which is profit, which is EBITDA, which is earnings per share. I just call them all the same thing. This isn't like accounting 101. And then revenue's up as well. That's sales. So earnings and sales. So it makes sense that that would go up. But in general, it's still not easy. Like, look at this earnings reaction. So earnings was here. This is the level, 235. So 235 is actually up here. And we can see we actually went below that on the 14th. So it don't make it easy, even when the numbers are all great. Here's the 14th, all the way down here. And this is 235. So if you're watching your phone and you're being, prudent or whatever, you would have sold down here. Maybe you rebuy when it gets back above, the next couple of days, whenever you take a look at it. But it technically went below after hours as well on the 20th. So that's over here. So anyway, awesome move. I'm just trying to show some of the nuance of some of these moves. Whereas, this is great. Everyone's excited. 40%. I got 40%. It's like, yeah, well, if you were safe, you would have actually stopped out to save some money, because sometimes, they don't keep going up. Meanwhile, a company like GM, if you played by the rules, you'd be up 10% almost, give or take, which is nothing to congratulate yourself on or brag about. But look at how well it held this level. Hit it here, held it here, and kept moving up. So sometimes the boring ones that don't even have like the best earnings, the best sales, the best guidance. This one did have earnings that beat, but they don't always coincide with the actual best results. So we'll jump that into the old ChatGPT, but all this is just to come back around and say, here's that level for real, 15.5. And if the market can chop around and then get above that and then retest that, that would be ideal. More likely, that's not very likely. More likely the market's going to come down a little bit. You might have to risk off of like 13, risk 50 cents, look for a $5 move, and hopefully it just blasts right through this level. So those are the levels for real. And I think the earnings sales is good enough. You don't want to size super big because it's an unprofitable company, right? So it's just notable that they are losing money. GM, the revenue actually was a year-over-year decline, beat estimates. So revenue beat, that's sales, and then earnings per share. So earnings beat estimates. So that's good. And then guidance. Well, they raised guidance. Okay, so you know what? I think we're just sort of cementing the point that I almost was trying not to make, but that you really should look into earnings, sales, and guidance for every single earnings reaction, because these two both were awesome reactions. GM and whatever one I was just talking about. Awesome reactions, Lumentum, and all had higher revenue, higher sales, which is revenue, higher earnings, and higher guidance. So those are the cream of the crop, but you can still get moves off of companies that are unprofitable. So I think Real is definitely in that bucket. And the more important thing here is these days are pretty compressed. Even all the way to here it's only like 8%. So hopefully it'll come back, make this like 3%, and you'll get a move up. So that is the real. Those are the ideas. Sim probably a little more interesting for being real. And if you like these ideas, hit that like button. If you want a free course on how to buy stocks before they go up, hit that subscribe. And if you want to join in the Discord, head over to stockscommunity.com. You can try that for $25. I'll see you in the next one.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.